Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Monday, the 22nd of July, Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome, everyone. We're going to go for our usual regular run through that we do on a Monday, which takes a slightly bigger look at the shape of the week. We'll have a look at the major macroeconomic, fundamental, geopolitical, central bank events that have shaped markets over the last week and are potentially going to shape markets as we go into this week. Where are the trigger points potentially going to come from? Why do we do this when we're day trading at trade day? Well, primarily because it gives us an idea of where the volatility points would be, where we could see greater volatility, potentially lower volatility, and we may then potentially adjust our trading strategies. Where might we see more likelihood that we get trending days? Where might we more likely see consolidation, mean reversion days? We might adjust our strategy because of that, even though we're day trading. So first of all, let's take a look at, below in the columns below where you're watching this, if you're watching this on a live stream rather than on YouTube, if you're watching it on the live stream or in the members area below, you'll see the three columns. We have the technical analysis column on the left. The middle column is the fundamental analysis column, where you'll see these reports, the macroeconomic, macro matters, and the weekly recap and outlook. And then on the right hand side, you get the news reports. Okay, so this comes from the central column. The macro matters. This is the bigger in-depth dive into what's happened over the last week and what we've got coming up. I'll go to the macro matters, the weekly recap, rather than looking at the macro matters in here. So obviously, first thing was sector rotation continued last week. Small cap value stocks gaining momentum, and growth stock and tech stocks in retreat. US retail sales was solid last week. That was the main data point from last week. More and more moving towards a Fed rate cut in September, and potentially at least 2 rate cuts now into the end of the year, potentially up to 3 rate cuts. ECB left their rates unchanged last week. But the market is looking for further rate reductions as we go into the end of the year. Another 2 expected from the ECB. And then this was out of date, within a few hours, actually. We published this on Sunday in the UK afternoon, which was in the US morning. And obviously, Biden now stepped aside. But, we were writing about Biden facing mounting pressures to step aside. But he's obviously, there were reports suggesting he could withdraw this weekend, and he did. So that's the added bit that wasn't picked up in there. Going into this week, what are we watching in here? So just actually running through what the markets did. Equities were off from record highs and cycle highs across the US and global averages. US bonds were little changed on the week. The US dollar index initially sold off and then rebounded from a multi-month low. Gold futures actually just poked up at the record highs and then plunged back lower on Friday. And oil futures sold off on Friday to a new multi-week low. Going into this week, what are the important things? Well, we've already had this. We'll talk about this shortly. The People's Bank of China interest rate decision on Monday. We get the Bank of Canada interest rate decision on Wednesday. Remember, the Fed now goes into blackout period as of this Saturday just gone, until the meeting at the end of the month, when we get the result on July 31st. On the data side, key macro data this week, we get global flash PMI data Wednesday, US GDP and durable goods on Thursday, and the much-watched month-on-month, year-on-year readings for the PCE, the personal consumption expenditure data, on Friday. Remember, that's the Fed's preferred inflation measure. And on the earnings side, the key results we're going to be watching this week, Alphabet and Tesla are both out on Tuesday, and you can see the macro data we have here going into this week. We've already kind of run through that, and here's the main data we have on the earnings side going into the week. So you can see that all explained in more depth here in the Macro Matters publication that is also in the central column below. Jumping towards back to what we were talking about there with the Fed, we went into the blackout period on Saturday. That runs right the way up to wrong month there. runs right the way up till the meeting, and through the meeting on the 30th and 31st when we get the result on the 31st. So not this Wednesday, next Wednesday. We're waiting on the Fed, and no comments between now and then from Fed speakers. You can see Monday we've got hardly anything in here. We've already run through the main calendar. What we did get though, if I actually just go back to yesterday and back to today, you will see, actually it's going to come under yesterday's, we had the PBOC. You can see interest rates changed in here, unexpected interest rate changes from the PBOC, easing rates in here, unexpected easing of rates from the PBOC in here as a stimulus for China. And now we see that China surprises with rate cut after Xi's big meeting disappoints. Policy moves higher urgency officials to support growth. So the Chinese economy continuing to be languishing, hasn't really had any kind of significant recovery post COVID really, and is still struggling. So they cut the 7-day reverse repo rate, short-term policy rate. It doesn't really matter what they've done. The thing is, it was a bit of a surprise, and that they're moving to try and stem the disappointments in the growth data and the various data points that we see coming out of China. On the earnings side, we've already mentioned the big two that we're expecting tomorrow. So let me actually just put the filters on here. I don't think the filters are turned on. Maybe the filters are on. Got the US. Oh no, the filters are on. I'm sorry. So it's a big week in here. I think probably biggest week of the earnings season here. I'll go back to this week though. Verizon, we've already had out. That's the big one we were waiting for today. EPS, you can see bang in line with expectations. A fairly slight miss in here on the revenue in here. Going into tomorrow, the big two are Alphabet and Tesla. Both of those coming, you see, after the bell, after the close tomorrow. We also get Visa and Coca-Cola tomorrow. Moving on through the week, it kind of calms down a little bit. Qualcomm, Thermo Fisher Scientific, and IBM. We'll be certainly watching out on IBM. Also get AT&T in there. Moving forward to Thursday, AbbVie, AstraZeneca, Honeywell, and then Friday, Bristol Myers Squibb, Colgate Palmolive. So really the big focus is going to be on Tesla and two of the Magnificent Seven coming up on Tuesday. Alphabet, aka Google, and Tesla tomorrow after the bell. Let's go to 5 things to start your day in here. You can see muted reaction really to Biden stepping to one side. Stocks have rebounded slightly overnight in here, and the dollar slightly lower. And havens like Treasury and Swiss franc edge slightly higher, and European stocks and US futures slightly up. I'm talking about stocks to watching here on the Trump trade. Is the Trump trade still in place in here? Especially when they're considering whether the Trump trade is still on or whether Biden's exit from the race boosts the odds of a Democratic victory. China stock shock in here. That was the rate cut we just mentioned. Earnings for Verizon we've already had in here, as we said, and they're talking about Tesla and Alphabet tomorrow and the Magnificent Seven. A busy week in here coming up, and then also in here monetary policy and the monetary and political backdrop shifts. Big trades that have held sway for years are getting reshuffled. So basically a shift, and we spoke about that at the top of the webinar, into value, out of mega cap into mid and small caps in here over the last week or so in here. Some of those trades are just look a little bit tired and getting challenged by the potential changes we're going to have in monetary policy going forward from global central banks, and also by the political turmoil or the political changes potentially expected going forward in the US, and also what's going on in Europe at the moment. What else do I have for you? US futures riders, traders look beyond Biden exit. Dollar slips, we'll recover that. NASDAQ poised to rebound from its worst week since April. Traders game plan what Biden exit spells for the global markets in here. So is it going back to the normal, going back into growth? Biden bows out, election bets shift, China cuts, all the stuff we've already covered in here. Futures rise up, Biden pulls out. Just repeating the same stuff. Wall Street the week ahead. Investors count earnings to calm the $900 billion US tech rout. So this big sell-off in here on tech, on mega caps, on the NASDAQ, looking for those numbers maybe tomorrow from Google and Tesla to start to see a rebound in that big tech trade. Geopolitics is back to break market stride, so we already covered that. Running through the major exchanges in here, you can see Hang Seng benefiting from that rate cut out of China in here, up over 1%, whereas the Nikkei actually down 1% in here on the overnights this morning. European exchanges with that Biden bounce, you can see the German DAX and the CAC in here both up over 1% in here this morning. The German CAC and the French CAC and the German DAX, and the FTSE UK FTSE up about 0.75%. So healthy rebounds coming out of Europe in here this morning. Obviously, partly this to do with the fact that the Trump trade is an isolationist trade, so potentially negative for Europe. It was negative for overseas exchanges, and then with not necessarily meaning the Democrats are going to win now, but they've got more of a chance now, and that's seeing the European exchanges and global exchanges doing better. And you see in here Nasdaq in here up a healthy 8/10 in here already this morning, and 0.5% up on the S&P. Little to change in here. I'm not going to go linger too much on here on the CME Fed Watch tool. You can see end of year in here we're still about a 50% chance of 3 rate cuts. And pretty much nailed on for 2 rate cuts in. Only like a 7% chance we only get 1 rate cut. And so we've got 93% chance pretty much in here of 2 rate cuts by the end of the year, and just about a 50-50 bet whether it's 2 or 3 rate cuts going into the end of the year now, and nailed on now for a September rate cut. On the bond markets in here, it's kind of been a bit sideways in here. We've backed up to slightly higher yields at the end of last week, having broke down in here through early July down to lower yields in here, just to start back up and down the market more in this consolidation phase on the bond markets, but the underlying pressure is still in here. We're staying in here with a bullish bias despite the notable corrections to downside we've had on bonds. But equities in here after Friday's performance still pointing lower. Further support levels are broken here for both the Nasdaq and the S&P back on Friday. We've obviously had this decent rebound in here, which can actually, having written this, back over the weekend, now it looks like the chances are we're going to get a decent follow through on the upside in here now. So if you look at the resistance points in here, we're challenging resistance points in here from my reports, and I think the real risk is now turned. Both on the Nasdaq and the S&P, we're up over half. We've got our back at least half, if not more than half in here for Friday's losses on the Nasdaq. Obviously, we lost right the way through from Wednesday through Friday in here on the ES, and from before that, but certainly accelerating from last Wednesday in here on the Nasdaq to the downside. But we've got half of Friday's losses back. And if you look here on the 30-minute charts, they do look like little bottoms have gone in. So we've got now a succession of lower lows and lower highs. I think we could be seeing the markets move back up to like the 5,600 level here, maybe above in here for the ES, and for the Nasdaq looking to move back up to here like 19, maybe up to even a 20,000 handle here on the Nasdaq, even maybe up to as high as 20,100 today. So I do feel like having been more negative in here on having written over the weekend, this bounce we've got from Biden pulling out certainly offers up further upside in here going into today. Right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe. I'll be back with you tomorrow for another Bull versus Bear webinar.